All right, so in this video, I'm gonna give you a beginner's guide to trading penny stocks. You're probably clicking this video because you're thinking about buying a penny stock, investing in a penny stock. Maybe you're hoping to get rich trading penny stocks. I can tell you that it's not that simple. Most people who trade penny stocks lose money, and there are some really big traps in the penny stock market that you've got to look out for. I'm gonna explain those in this video. I'm gonna explain to you where penny stocks are typically traded, how to find penny stocks to trade, what type of penny stocks are the most risky, in my opinion, and which ones are safer. I'm gonna talk about penny stocks that I'm trading right now today that you should be keeping an eye on. Now, some of these are just gonna be a great example of the type of price action that produced a profitable trade. I actually took a trade today, made over $25,000, and that was trading a penny stock. I'm gonna give you that as a case study today so you can look at it as an example of the right type of stocks to trade. And I want to encourage you to dig deep, keep studying, keep learning as much as you can, because there's a lot of opportunity in the stock market and certainly in the penny stock world. My name's Ross Cameron. In case you didn't already know, I've made over $10 million trading primarily penny stocks. I trade lower price stocks. I've done very well. My broker statements are on my website, but I have to tell you as always that my results are not typical. I want you to take this as an opportunity to learn from someone who's had a lot of experience and just study, study, study. So I hope you really enjoyed this video, and let's go ahead and jump right in. All right, everyone, so let's go ahead and jump in. Before we do, case in point, DRCT, this is a stock up 98% today with 103 million shares of volume. My profit on it is over $25,000. This, while some people would say it's not a penny stock, other people would say it is a penny stock. Just 2 weeks ago, it was priced at a low of $1.18. And now it's rallied 400% off the lows. It's given a tremendous opportunity, and the profits that I have from it are just from today, not from holding it for multiple days, but just from day trading it. It's a stock that had breaking news. I found it on my scanners right here. It was the leading gainer in the market today. And I'll show you more about these scanners a little bit further along in the video, but just to show you, this is the right type of stock I think to be focusing on. Leading gainers in the market. It's a NASDAQ listed stock. It's not an OTC stock. So you may be thinking, well, geez, I really want to be trading 50-cent stocks. You know, those are cheaper. This is $5 is too expensive. And I would agree that it is more expensive, but I have found so much more consistency in this price range of just over $1. And I'll give you just a couple examples. Here's LL from last week. In one day, went from $2 to $7 a share. Here's NRSN. Last week, in one day, went from $2 to $8 a share. So your goal as a trader, and certainly as an investor, but as a trader, you're looking for stocks that have the potential to make big moves. And even if you only capture a small piece of that move, you know, you're never going to, regardless of how big the move is, you're never going to capture the whole thing. You'll capture a small piece of it. So it's better to capture a small piece of a big move than a small piece of a small move. You know, you look at a stock like Apple. How much is Apple up today? Well, let's just see. We'll type it in here. So Apple is down 3%, you know, a third of a percent. Facebook up, 0.2%. I mean, this is just not significant. It's hard to make money when stocks are not volatile, and these don't have enough intraday volatility. So you might naturally be inclined to go towards penny stocks, which are maybe you think are stocks under $1. And I think that I understand where you're coming from, but I would encourage you to look at stocks between $1 and $2 or $3, because that's sometimes when they really start to pick up some strength. So why is that? Well, let's get into the lesson here. A beginner's guide to trading penny stocks. So officially, penny stocks are stocks under $3, according to the SEC. You know, by that definition, I do trade penny stocks a lot. I've got my metrics right up here, and these are this is my profit based on price. All right, so 5 to 10 is where I've made the most. Done well 10 to 20, done well on 2 to 10, not as much under $2. Usually I start to pick up speed over $2. And this is, as I mentioned earlier, almost $11 million in gross profit trading momentum and trading oftentimes what could be considered penny stocks. So I focus between 2 and 10, you know, up to 20 is fine. And I focus on trading stocks that meet the listing requirements to be on the New York Stock Exchange or the NASDAQ Exchange. And that's important because those are companies that are submitting quarterly earnings reports. They are subject to financial transparency. And when those types of companies have strong headlines, catalysts, they can work their way up from being, $2, $3 a share to 5, 10, 15, 20, and so on and so forth. One of the big differences between the stocks under $1 and over $1 is the way they trade. And you maybe have never been aware of this until this moment right now, but stocks above $1 trade with a minimum spread of 1 penny, which means the quote would be $1.17 by $1.18. Now, a stock could have a larger spread. It could trade, $1.17 by $1.25 or something like that. I can just look on the scanners here, just as for instance. So let's see. So NAOV, this was, I could use this one. So NAOV trading $1.21 by 22. Let's see. ZME, this is another penny stock, 33 by 34. CRTD, 16 by 17. Archon, 13 by 14. So you can see these are all trading with a 1 penny spread. IMPP, 1 penny spread. Okay, so, that's very common. Sometimes they'll have bigger spreads. Sometimes they're right at 1 penny. But in any case, if the stock is below, if it's below $1, they can trade down to the 1/100th of a penny. That means a 47-cent stock might look like this, 0.4714 by 0.4719. And so you're trading 47 and a 14th by 47 and a 19th. I mean, it's such a sort of 100th of a penny that you could be trading against that very, very, very tiny spread. And so one of the things that's interesting is for a stock to go from 90 cents to $1, how many increments does it have to go through? Well, if it trades at 1/100th of a penny, that means 100 increments for every penny. 10 pennies times 100 is 1,000. There's 1,000 increments for a stock to go from 90 cents to $1. Now it can skip over increments. It doesn't always go to each one, but that's how many increments there are. What about for a stock to go from $1 to $2? There's only 100 increments. So all of a sudden it took 1,000 to get to $1 and only 100 to get to $2. Another 100 to get to $3, another 100 to get to $4, another 100 to get to $5. And that's why we can see these really quick moves once they get over $1. Below $1, these stocks can be very slow. I mean, it could trade between 47 cents and 49 cents all day long because they're, 2, 3, 4 100ths there's 4 pennies, so 400th increments in that small little zone. So these can be very slow moving. So I don't like to trade stocks below $1, but as they cross over $1, that's when I start to get more interested. Now, the New York Stock Exchange and NASDAQ require all companies to keep their stock price above $1 a share. It's a listing requirement. If the stock falls below $1 a share, the company can get a notice of non-compliance. They have a certain amount of time to get their stock back above $1. They can also get a delisting notice, which means you're going to get delisted from the NASDAQ exchange. And where do they go if they get delisted? They go down to the OTC exchange. So you've got the NASDAQ, NYSE, Amex exchanges at the top, and then you've got the OTC exchange, which is just below that. So OTC exchanges are for stocks that are in bankruptcy or stocks that don't maybe choose not to meet the financial requirements to be listed on one of the big exchanges. They're not providing the same level of financial transparency, which means for an investor or a trader, they can be a lot riskier. Now, in order for a stock to get back above $1, we often see reverse splits. So many penny stocks have gone through a number of reverse splits. You may have seen a typical traditional split like with Tesla recently. So, Tesla or Apple does a 7-to-1 split. It's trading at $700. The next day, it's trading at $100. The stock didn't go down. They just did a stock split. And so that changes the number of shares outstanding, because what happens is if you're holding 1,000 shares at $700, you own $700,000 of the company. The next day you log in, it's trading at $100 and you're like, oh my God. And then you realize, well, wait a second, it says I own 7,000 shares at $100. 7 times 100, so I still have $700,000. Okay, phew. So what happens is the total number of shares went up times 7. And they have to get shareholder approval to do that. But it's fine, and it's a good indicator of management confidence in the company, because they want more people to buy the stock, and they'll be more likely to buy it if the stock is a little bit less expensive. But the inverse of that is a reverse split, and many penny stocks have this history of reverse splits. So they do their IPO at like $10, and then 6 months later the stock's at 50 cents. They get the notice, they have to get it back above $1, and short of becoming a better company and putting out really good earnings, they have no other choice but to do a reverse split. So a 50-cent stock, and they do a 10-to-1 reverse split. The next day you log in, and it's trading at $5 a share. Well, so what does the chart look like? Because it opened at initially 10. Well, they have to back everything up. So now they move that open all the way to, it looks like it opened at 100 and then came down to $5 instead of opened at 10 and came down to 50 cents. And if you had held 10,000 shares at 50 cents, the next day you log in, you're like, hey, it's at $5, I'm rich. And then you realize, wait a second, I'm only holding 1,000 shares and I've got the same amount of money in the stock, $5,000. And it's because they did a reverse split. And so this history of reverse splits pushes stocks lower and lower and lower and lower. People that are bag holders who've been holding for a long time, their value gets diluted more and more and more and more. They just, as the stock falls lower and lower and lower. This is basically a way to accommodate a stock that won't stop dropping. Otherwise it would go negative. So eventually these stocks can get delisted to the OTC markets. So a lot of the stocks on the OTC markets are there because they got delisted, but sometimes stocks will just initially list on the OTC market and they never move up to NYSE or NASDAQ. They don't meet the listing requirements. They're not able to get there, and so they don't. But I think any company, generally speaking, would aspire to be on NYSE or NASDAQ, a big exchange. So the OTC market is sort of the secondary market. And there's 3 tiers of the OTC market. And this is where most penny stocks live, because of course you can't really have a penny stock on NYSE or NASDAQ for very long before the company's out of compliance. They do a reverse split and then it's back above, $1. So the 3 tiers of the OTC market, it's the best market, the venture market, and the open market, the pink market, the pink sheets. Pink sheets, Wolf of Wall Street, bottom of the barrel. These are companies that can be in bankruptcy. They don't meet the listing requirements for NYSE or NASDAQ, and not even for the venture market or the best market. Now, they could meet the listing requirements for NASDAQ or NYSE with the exception of bankruptcy. So they might have quarterly earnings and do all the right things there, but they're in bankruptcy. So they, by default, get knocked down to the OTC market. But these are really the bottom of the barrel. In terms of stocks. So a traditional penny stock I would usually think of as a stock between 1 penny and 99 cents, right? They trade in 1/100th of a penny, but they're above 1 penny. And a typical penny stock the quotes will look kind of like this. This one's 45 cents by 46 cents, almost 47 cents. So you can see this has a slightly bigger spread on this particular stock. It is NYSE, so not meeting the listing requirement at the moment, but probably trying to plan out how to get back in compliance. And then here's another one listed at 69 cents, up a little bit today. I just took a couple examples here. These also, both of them have bigger spreads. The spread here is like 5%. I mean, it's not nothing. It's 69 to 73. So bigger spreads, lighter volume. And then you have sub penny stocks. And so if you've Googled hot penny stocks that I should trade now, that I should buy, you may find yourself landing on pages where they're recommending you buy a stock like this, trading at 1/3 of a penny. So these are stocks below 1 penny. They're not even at 1 penny, 1/3 of a penny. Although the spread is 1/3 by 1/9. So it's just under a penny. So it's very close to a penny, 9/10 of a penny, whatever. All right, and then you've got 000 stocks. This is the bottom of the barrel. This is the very, very bottom. These are stocks that trade 0.0001 to 0.0009. And this is what the level 2 looks like. If you bought it, and so the last quote was at 0.001, which is a 50% decline from 0.002. But imagine if the stock went to 0.004 and you were in at 0.0002. right? 0.0004, you'd be up 100%, right? Now it goes up to 0.0006, you're up 200%, 8, 300%, 10, 400%. All of a sudden, you can see why some people might be inclined to think that this is where I should go to get rich, but it's not. It really isn't. As a beginner trader, I tried trading OTC stocks. I tried trading these penny stocks, and I found them to be completely unpredictable. And essentially what you have are periods where they're hyped up and they move up quickly, and then they come all the way back down. They go lower than they were before. And while that's not all that different from the price action that you may see on NYSE or NASDAQ stocks, this one didn't hold its entire gains. There's still a certain degree of that. These have so much more volume that they're liquid. A lot of these trip zero, sub-zero stocks are illiquid. You really can't get in or out with large amounts of money. But what is interesting, so in 2015 or 16, let's see, I took a note. 2015, there was $240 billion of dollar volume in the OTC markets. 2021, it had gone up from 240 to over 700 billion, up almost 3 times. So the volume, dollar volume has definitely increased in the OTC market, but compared to NYSE and NASDAQ, you're going to have so much more liquidity on stocks in the $3 to $10 range. And this is a stock, DRCT today, with 100 million shares of volume. 100 million shares of volume. I mean, think about that. This is $500 million in volume at $5. That's $500 million of volume. So you can easily move in and out of a stock like this with $1 million position, a $2 million, $10 million position if you wanted to, or easily a $5,000, $10,000 position. And that's simply not the case on most of these, really cheap stocks over here. They're illiquid. And so you may see newsletter alerts and, hot penny stocks and this and that if you try to Google it. And that's what I got caught into myself. And I just found myself losing money. And, it drops from 0.002 to 0.001, and you've just lost 50%. So there's no way you can manage risk when you're trading those types of stocks. So I like volatility, but with less risk than the traditional penny stocks under $1. And so that's what got me focused on, and I have a couple examples here, but that's what got me focused on these types of stocks. So this is one here, like several of the others that I've shown you, went from $2 to $3.50 in one day. That's a fantastic opportunity, right? Now, let's say you bought 1,000 shares of this at $2, or let's say I bought 1,000 shares at $2. So I'm putting $2,000 into the trade, and my max loss is $1.80, the low of this pullback right here. So I'm really only risking $200. That'd be 10% of my account. Okay, that's not insignificant. But $2,000, by the time it goes up to $270, I'd be up $700, right? So now I risk $200 to make $700. That's a great risk reward ratio. It goes up to $3, I'm up $1,000. I've doubled my account in one day from 2,000 to, 3,000. Of course, that would be if I was willing to put my entire account into one trade. It's a lot of risk. I have to say, as always, that trading is risky. My results are not typical, and you should practice a simulator before you put real money on the line. But you can see where people are going to get interested in trading these types of stocks. Here's another one from $1 to $2. It breaks through $1, goes up very quickly to $1.65. Right? How many increments is it from $1 to $1.65? It's only 65 increments, 65 pennies. Whereas from 90 cents to $1 was 1,000. So now it moves fast. Here's one that went from $2 to $6, $8 in one day. Another one of those really big moves. So there's some profit that I got on that one. So I found in all my years of trading that I was able to reduce my risk by avoiding OTC stocks. I still trade what would traditionally be considered penny stocks, but I don't trade the OTC markets, and I don't certainly trade pink sheet stocks. Generally, they don't have a lot of liquidity. That means your orders will be very slow to execute. It'll be hard to buy, probably even harder to sell. If you focus on stocks like DRCT, and this is a stock right now, so let me get my tools back up here. So DRCT, this is the top gainer right here, 86%, top gainer in the entire market today. That's a big deal. That's in the entire market. That means this stock is going to be getting the attention on possibly some news networks, very likely on trading platforms like Robinhood, E-Trade, TD Ameritrade. Traders are going to be talking about it. It's the most obvious stock today. And it's going up because it has an actual reason, not because some newsletter emailed out that this is a hot penny stock for, this month. It's going up because it has news. What's the news here? Fourth quarter earnings, right? Full year 2021 financial results. That's news. That's a catalyst. That's a real reason to want to be buying a stock. This is what you want to focus on. Some of them are going to be a little less expensive. Some of them will be a little more expensive, but these are the type that you want to look at. So every morning when I log in, this software that I use, which is the same software that a Warrior Pro member has access to, it gives me my top gappers right here. So this is a watch list that stops updating the order, the volume increases and stuff, but the order stops updating at 9:30. So at 9:30 a.m. Eastern Standard Time, this was the top gappers in the entire US market of stocks over 50 cents. DRCT, ADGI, VYNT. And then you've got to look at each one and say, well, what's the reason? What's the news? What's the catalyst? What's driving it higher? You do a little bit of research, you look at the chart, and it's important to understand market sentiment. What's the social sentiment on this? And you can see that on social media. You can see that by connecting with other traders. We've got a large community of traders, so I can usually get a good sense. Are traders bullish on this stock? Do they think it's going to go higher? Or do they think it's going to roll over? Do they think it's not going to work? So I sort of take the temperature of what people are thinking on the stock. And when people are bullish and it's the only stock that's going up and it's the most obvious one, I'm going to get aggressive on it. I'm going to step up to the plate. And then as it's moving up in real time in the morning, I could scroll back here. It's going to start hitting my scanner here because it's hitting new highs. So this scanner is just constantly searching the market for stocks moving up in real time. This is basically it's like radar. It's, if you want to think of it like that, it's searching the market. And these are all the different stocks that we're hitting today at different times. And any of them could have been fine opportunities. You pull it up and you look at it, you make the decision. But this is how I find strong stocks to trade. I'm not subscribing to, a ton of newsletters or, looking at penny stock alerts or this and that. I'm looking at my scanners and trying to see what's moving up right now today. And what's the reason that it's moving up? And that is a big contributor to the success that I've had. It's having the discipline to focus on leading gainers and stocks moving quickly. So just another metric that I'll show you here really quickly. Let's see, I'm going to do instrument and I want to show you this here. So my performance by instrument relative volume. These are metrics. These are my trading metrics. This is real money. Broker statements are on the website, warriortrading.com. So these are real metrics from my own trading. I can go down here and, if you're curious, just grab this. But so the metrics for 2022, you can see 2017, 18, 19, 20, 21. I started in 2017 with $583 in my account. $583 on day one. That was how much money I had in my account right here. I've turned that now into, as of my last statement balance, 9.7 in net profit, almost 11 million in gross profit. And the bulk of that, over 89%, is on stocks with 5 times relative volume. 5 times relative volume. What does that even mean? Let's look at a couple charts. So this is the stock right here. Today, this is actually trading on 20 times relative volume. The average volume for the last, all of its days, you have one high volume day here, but the average for all of these is 1/20th of what it's trading on today. When you start trading stocks with low relative volume, you're trading stocks that not a lot of people are watching, not a lot of people have interest in them, and these are the wrong type of stocks to trade. They're going to be very difficult to trade. A stock like this, for instance, it has no volume today. No one's trading in it. No one's looking at it. No one cares about it. But on particular days where it has high volume, those might have been particular days that it would have been worth watching. Back there, maybe up in there. So LLL, what was the volume on this one the other day? Average volume, it's like doesn't even register And then on this day, it traded with almost, was that 100 million shares of volume? Just again, incredible volume. NRSN. And why would a stock usually trade with like 10,000 shares of volume and then the next day trade with 100 or 150 million shares of volume? News. There's some type of catalyst driving the action. And that's your job if you're an investor or you're a trader. As a trader, we're looking to jump on stocks that have already started to move, the train that's leaving the station. As an investor, you're trying to guess which one's going to be next. And that's hard. It's very hard. I find it easier, in my opinion, to be a trader than an investor. So I focus on trading. I look for the trains that are leaving the station. So today on DRCT, I didn't even start buying it until it broke over this level pre-market. It was like right through here. As it broke through that wedge, that's where I started trading it. And I got in a little high at 450. That's fine. There was still a lot of room, a lot of opportunity. And I knew that because I've seen this pattern time and time again. So I hope this has been helpful. If it has, hit the thumbs up, subscribe to the channel. I often do live morning show broadcasts. If you're subscribed to the channel, you get the notification when I go live as long as you hit the alert bell. And I am adding new content just about every day. So make sure you're tuned in. I hope you really enjoyed this video, and want to remind you as always that trading is risky. So do take it slow. Trade in a simulator before you put real money on the line. Warrior Pro members do have access to a simulator that we offer. So if you're thinking about going pro, come check us out over at warriortrading.com. Or if you want to keep trading on YouTube and just following along, you're welcome to do that. You can use TD Ameritrade for a simulator as well. All right, thanks again so much, and I'll see you for the next episode. Bye, everyone. Well, I hope you loved that video, and if you did, here's two others you should check out. One is the story of how a 92-year-old former janitor made over $8 million in the stock market. Check that one out. And the other is the simplest day trading strategy for beginners. That one's gonna extend on what we've already talked about here on penny stocks and the right type of stocks to trade, but it's gonna go into more detail. So check out those two videos if you wanna keep learning, and don't forget to subscribe to the channel because I go live every single morning for the live day trading morning show, and I'd love to have you guys tuning in.